Good evening, everybody. Welcome to tonight's little get together with James and Mitch, myself. We're going to go over a weekend review of what's going on this past week, some of the trades everybody's taken. First of all, I'd like to welcome James and Mitch to the show. Good evening, boys.
Good evening, Rev, and good evening, traders.
So we're going to jump right into it. We talked a lot this week about Bitcoin and where it's slowly but surely going at some point in time. I've come up with a few things. James has come up with a scenario, and Mitch has come up with a scenario. So I think we're all looking at the same paths, but we got different opinions. What do you think there, James?
Oh, I think we've been discussing Bitcoin extensively over the last 2-3 weeks, both between us and throughout our voice sessions on Discord with all the members on Hyped on Crypto. And I think, look, we can see a lot of different possibilities happening, which is kind of healthy when you can look at different point of views between traders. It's probably a healthy thing to do at some point. And that's what we've been doing all along on Bitcoin. And so far, it always seems to be decision time. It doesn't seem to want to get going in one direction clearly. So we've identified a few different ways of looking at it. You more on a broader perspective, as you can, as we've looked at your daily chart. I looked at a downward trend on a 4-hour and a 1-hour, and Mitch has it in a huge falling wedge. And within that falling wedge, he has it in a downward parallel channel within that pattern. So, I mean, but I think it's normal after this type of correction, this type of panic. I think it's shaken a lot of people. So I think it's really normal to see these kinds of just shakeups at the bottom that take time to get going, and that may be choppy for quite a long time, especially when we go look at some of our charts here. So.
Yeah, and everybody's looking at mine right off the bat here, and I've got it on a 1 day, and you guys are seeing my chart as well here in our little broadcast central, so to speak. But first thing I want to point out, and why I think the 50 MA is such a huge level of support here, and as you can see right here in the highlighted area where this pin is hit that EMA, and that's where I'm basing my initial target for what I have up as a symmetrical triangle on a daily chart, guys. So, but it bounced right here, and you can see it bounce back up off of this EMA here. It did it over here as well, and it bounced back up. So, and it done it again here. All these highlighted areas on this 50 MA is been pretty pivotal in the history that we've seen. So, I mean, we can go all the way back. This was on the 12th of November that I'm basing this off of, where it bounced there, and it bounced here, and it bounced there. So, going into my little spew of the Bitcoin chart here that I've got up, it crossed over the 50 EMA on the 50 EMA on the 13th of January, and it's been downhill ever since. Now, if we look at this, let me get my little pen here. If we look at this area right here over the last week or so, it's gone straight. I mean, basically, it's been up and down. It's bounced off of this support here, and it's been. We don't know where it's going or where it's headed. You know, we're speculating here.
Yeah.
So with this little support area right here, I'm seeing a little, different, and that's at the 10.3, and I'm hedging myself to go as far as this triangle is concerned. I mean, I'm just waiting for another touch either on this one or this one right here, and if it touches either side, then that gives the confirmation of where my deal's headed. So, and as you can tell, there's a lot of space in between the two. So, yeah. I mean, there's it's a level of uncertainty. So, with that being said, I mean, we can look at this line of support right here and kind of speculate where things are going, but I'm going to take it to a different extreme with this right here. Down here in the RSI, my RSI is pointing straight right now on the daily. I mean, it's not pointing up or down. My ketchup mustard down here in my MACD. Let me expand my MACD up a little bit so everybody can see. It's well, I went and done it there. Went and done it there. It's not. They're not. They're starting to come back together.
Yeah, and your histogram is starting to show momentum more to the upside and not added momentum to the downside from what I can see there. So.
Right. So I mean, but we're starting to see a little bit coming back up, and I just merged them two together if everybody's wondering what happened here. And there I went again. But it's gotten, well, dadgummit, and I can't get it off of there. But anyways, it's gotten to where my ketchup mustard is starting to make a move here as far as which way it wants to go. And so I got to let this play out because I'm in a daily chart right here, and I'm just going to X out on that because I think that's crazy.
And something that I'd like to point out on your first touch that you talked about, where at the bottom left you have a yellow circle there in highlighting a bullish engulfing candle, basically is what I wanted to show the viewers. Is basically you're having a bullish engulfing candlestick on a daily chart right off his blue moving average. So if he says MA and people don't know what Rev's talking about, it's just a moving average, and you see 3 of those on there. But when we see a bullish engulfing candlestick formation on a daily, it is a very good indication that we are heading in that direction. And you can see after that happened, we went pretty much parabolic straight up, and then until we reached all-time highs and then had reversal signs. I mean, it was pretty much making money all the way if you were long that Bitcoin. And as Rev pointed out, is EMAs seem to be starting to kind of start moving sideways, or seem to want to do so. And of course, we have a lot of potential support there at the bottom of that triangle, and at certain levels. Last night we went straight down to the close to 10.3 that Rev was talking about. So that's exactly where we stopped and bounced last night throughout the 3-4 hours that it was just going straight down. And so far we've bounced back. And as far as I have it on my trend, more in the short-term view, it's again at the top of that trend wall that we've been talking about for 2 weeks.
So, excuse me. Yeah, so and looking at my chart here, guys, there's, let me get my little pen here. This little white dotted line here, that's a level of support that we bounced off the other day, is 9,010, and then this green line, this is a level of support at the 99.9 and 99.09, and then we got this at the 10.3. So I mean, and then the trend line here, I mean, you know, is that a level of support? And it is, as it goes across.
Yeah, higher lows, right?
Right, higher highs and higher lows. So, I mean, you know, we got to take it into consideration. Now, this is a long shot. This is not going to play out overnight. Like I said, we're several days away unless we get a real serious indicator that touches either the bottom or the top there, and then that's going to lead to confirmation. I don't foresee that in the next day or so. I'm picking that right here, which is on 217. That's that little pink line that goes down through everything. I'm hedging that it's going to be before then or right there at it. I mean, either way, it's going to, it's still got to get to that date. I mean, we're going to see it one way or the other of you know, if Rev's right or not. So, but I'm thinking that it's going to continue to move and something's going to break, and I think it's going to be to the upside. So, with that being said, that's my take on where we're headed with Bitcoin and where we've been the last several weeks. So now I'm going to send it over to James, and we're going to look at his chart and see where we go at from here.
Hey, James, what's going on, man?
Hey, so as we've discussed, and I think we looked at it briefly on this week's earlier live stream, I mean, we're basically looking at a downward trend channel. Now, this is on a near-term view, or like we've been going down since January 6th, and this trend, and we're making wave patterns, as you can see. I've tried to put numbers on there, although it's getting a little bit cluttered because we're trying to add more indications to help us figure out exactly what's going to happen and what's happening right now. Now, to point out too, something that I wanted to comment on at the end of Rev's analysis is that, I mean, the pattern that he has there is a symmetrical triangle. Now, that has no real directional bias. Other than that, normally if they've come up from the bottom, which is kind of the case here, they normally have a slight bias to break in that same direction when they do in the future. Now, that's a daily chart, so each bar on Rev's chart was a day's worth of price movement. So that can take a while to develop, and normally those triangle patterns or wedges and things like that will go close to the end where it's more of a squeeze, and then it gets squeezed out and it has to break out in one direction. Now, if that happens, we still have quite a ways to go to get the squeeze in his pattern. And I think if we think about how this correction or this downturn happened and what the results were for the investors and traders' psychology, I think it's normal that it would take time to get some hype and get some legs again, because a lot of people were hurt, a lot of people lost money, and I think it's something right now that's still in the back of everyone's mind, at least temporarily. So I think people are a little bit more careful. They take their time a little bit more, and I think that's why we may be seeing either some slight move ups or some slight move downs, or maybe some sideways choppiness, right? But I think that's normal with the market sentiment that we should have and that we do have after such a correction. So if we go back to my chart, basically If we are in an Elliott wave downtrend pattern, where I have a 1 wave down, 2 wave up, 3 wave down, and then wave 4, we were speculating that we might be in a 5th wave down, which normally is your last wave of a trend. Now, normally the 5th wave should go further down than the previous wave did. So if that's the case, that's why we're looking at least maybe going to retest the double bottom that Rev talked about, where he had his gray dotted line earlier, which was at about just above 9,000. And remember too, everyone, that big round numbers are always important psychologically, at least temporarily in the markets. They always seem to act as support or resistance depending on the direction we're heading in. So that's going to be certainly an interesting level to keep an eye out. And if we do make lower lows and finish our 5th wave, then we've drawn fib extensions from our wave 3 down to see where maybe we could be ending this whole thing if it does decide to continue downwards and finish wave 5 that way. Now, the blue lines that you see horizontally are basically coming from way far in the past. So I'll zoom out. I'll go back to maybe a daily chart just to see where those come from, right? But you'll see that the second one lines up almost perfectly with our first fib extension target, which is our 1.270. So let's just go back here. So you see, so I zoomed out to a 4 hour. So you can see I used this level here, which had been support when we broke through and came back a little bit. And this here was previous resistance on our way up, and previous resistance on the way up becomes support when we come back down. So it's important here, but it also retests it here after we've broken through it. So I put all those just to show you that the previous information that we have, and I mean these levels are from pretty early November of last year. So that's what we're going to be looking at. One of the reasons why we thought that maybe the breakout or a little push that we had earlier this week in Bitcoin was maybe not going to have or find much legs or much momentum is that if we look at the 1 hour, I mean, as we were doing our last push, our last strong push to the upside, we were already seeing MACD divergence, which just indicates an opposite indication between the momentum of the move and the price action. So I tried to point that out here with the 3 blue arrows. Those are indicating higher highs. But if we look at our MACD histogram, it is basically making lower highs during that time. And we were also already approaching, at least in the short term, near overbought levels. So that made me think that maybe we couldn't push it higher too much, at least too quickly. So, and as we see, that was also forming a rising wedge, which is a bearish pattern. And we broke through it, came back to retest our trend wall again, the top one. And last night we had quite a precipitous drop. But I mean, now, I mean, it's Friday night. It's going to be the weekend. So, I mean, again, this is going to take time. And we're going to have to wait for a few more signals. And I know Mitch has a different perspective to also show us that may also add some other indications to where we might be headed.
Yeah, absolutely. Well, regardless of anything, I think with all our charts, time is the great element that is what's going to play out to make us break out or break down. So if you're looking at my chart, I have a large falling wedge, which is ultimately bullish in the long run, but we're in the dead middle of this wedge. So, but we're also in a downward channel, like looking at James's chart. So I have that as well. But if we break this downward channel, we've got a real good shot of hitting the 13,000 level. Could be even a little higher, just depending on how high and fast the rise is. And if we break down to the bearish side, I mean, we could be looking at the 8,500 level. So there's a definite broad spectrum of places we could be in the next couple weeks. But this consolidation and chop could extend for the next couple months. And something you got to remember, the market can stay irrational longer than you can stay solvent. So just be mindful of that. These things take time to develop. We had a really long bull run. Arguably the best, longest, strongest bull run in the history of anything that's ever been on a chart. So that needs time to consolidate for long-term sustainability.
Yep. And let's say you were to put a Fibonacci retracement, Mitch, on that falling wedge. Let's say that we had made the lows. Like if you did from your top of the falling wedge to the current bottoms or near-term bottoms, like what could be like interesting targets that we could be looking at if we do start moving and breaking to the upside?
Absolutely. So I just charted it top to bottom. So that means we're looking at resistances and targets. So the first one we hit and we failed, obviously, because we had that sell-off yesterday at the 236 fib level, which is 11,571 sats. If we break that, we break through that and confirm above it, our next target would be 13,152 sat. And then after that, of course, 14,429 sats. And then, you kind of get the picture. But we really need to see higher highs. We haven't been seeing higher highs at all. And that's never a good thing if you're a bull.
Yeah, but I think it's just, once again, showing the indecision and the lack of momentum and clarity in the markets right now. Yeah, just market sentiment after a big correction, I think, is normal.
All right.
Do any people in the chat have a question about Bitcoin?
Well, Long John Silver had something. He was talking about a trend line somewheres, and I guess he was scratching his head or something. I don't know.
Long John trend line. All right.
I don't know. I don't know if he was talking about me because I had put a kind of a blue line on the top of my MACD histogram to just show the divergence, right? But so maybe it's not something that you see all the time. So it was just it wasn't really a trend line, just showing the MACD divergence, if that's what he was looking at. But I'm not sure. I did just I just did ask him the question in the chat to see if he can clarify what he meant, but still haven't seen an answer. So we can move on. I think we still went through extensively what we think is going to happen or what the possibilities are on Bitcoin, at least for now.
Yeah, so I mean, I guess if no one else has any questions, y'all want to move on to the next coin.
And Lewis is asking sarcastically or jokingly if we have a cup and handle, and that's a good one, Lewis. He did add it was a joke, so yeah, we won't have to address that one. Thanks for the humor, Lewis.
Hey, it could be Luis, right?
Oh, it could be, yes, Rodriguez. So I assume that you might be right, Mitch.
I don't know. I mean, I've had I got a maker's mark here.
Yeah, so basically, Elliott wave, you want to focus on doing it, first of all, because of some of the rules, like the fact that some of the waves can't be shorter than other ones. For example, wave 4 in this case that's identified going from the bottom of the trend channel to the top, that, for example, should not be coming back into wave 1. Now, in this case, it makes it a bit iffy because we do have that big wick that would invalidate that. And this is kind of a weird wave 1 down and kind of just meandering sideways wave 2. So that's why you have to be careful. And we see a lot of our members or a lot of people just in the trading community trying to use Elliott wave where it shouldn't be used. You can't draw Elliott wave. They need to be waves up and down. And like I was saying earlier, the next wave in the same direction of the trend has to go further down than the previous one in that same direction. So you can't be drawing Elliott wave in a symmetrical triangle or in a wedge or things like that.
Or on the 5 minute.
Or on a shorter time frame. They just don't exist there. So guys, if you're doing waves, please do it on at least an hour and make sure that you have a trend first. Don't do it on a symmetrical triangle where your rules will, by definition, because of the how the pattern is built, your rules will be invalidated already. So usually trends, like if you look at big floor traders, like big firms where they have 500 traders on one floor, they look at establishing trends and waves on a 4-hour. So if you're there on a 15-minute trying to do Elliott wave, I mean, that's not going to have much significance in the grand scheme of things. And the other thing is that you can have waves in everything. There's waves on the 1 minute that you'll see in one leg on the 5 minute, and so on and so forth. But I mean, you have to understand where the real waves are happening. So in this case, you can see we have, although it's not the most perfect Elliott wave pattern that I've ever seen, it can still be one form of possibility that we're seeing. But yeah, please keep to at least medium to long-term time frames if you do this. Go check your rules, and we're also going to work on bringing you those sets of rules. But even then, guys, Elliott wave on its own has quite a bit of flaws. So, and it's hard. It's one of the hardest things to learn in trading.
Very speculative.
Right? So there are a lot of things that you guys, if you are new to trading or even intermediate, that you guys can focus on, whether it's patterns, reading the MACD, the RSI, the rising and falling wedge, or just how to read candlesticks, or using your moving averages before you should or need to move on, if at all, to Elliott wave. I don't think that's where you need to spend your 80-20. That's not where your efforts and your energy is the most efficient at this point, if you're getting into this journey of becoming a trader. So that's pretty much my spiel on it.
Yeah,
it is a journey.
A very long
journey. Many years to learn, and the goal is to learn something new every day.
But you're not
really
going to learn
get
that
this,
one.
Guys,
you're not going to learn that one overnight.
Get like an Evernote or a notepad and just try to write something down every day about something you didn't know about in the world of trading. Try to memorize that.
But that's one that you're not going to learn overnight. I mean, it's just not going to happen. So, I mean, it's okay to play with and, get the hang of trying to market, We'll take a look at it in our Discord, when we're all, just ask. We'll answer anything if we can, and if you're drawing it right or whatever, feel free to ask. But that's a long-term indicator right there that you just can't take lightly and just mark it up and and think that it's right, because 9 times out of 10, if you don't know what you're doing, it's wrong.
Yeah, you want to go on my screen real quick? Just for a second.
Yeah, Mitch had posted that in our Traders Mindset and Motivation section on our Discord, Hyped on Crypto channel.
Yeah, so there are a million different indicators that exist out there, but our philosophy here is keeping it simple. You don't need a billion ladders to get, to where this guy's getting. There are only a few. And the Elliott wave can actually be maybe in that big bundle of ladders down there. It gets complex, and it can actually make you ask more questions than give you answers that you want to make a decision on a trade.
Yeah, and the other thing in that picture, normally, like I've seen memes like that before, they'll put a ladder straight up the wall next to that bunch of ladders, and it gets you up the wall, right? So sometimes it's keep it simple, stupid, right? The KISS principle. So, I mean, sometimes just put the ladder up the wall. You find the few indicators like we normally try to have on our charts. We don't have a ton on there. Sometimes, like my chart will get a bit more convoluted if I put some trend lines and some Fibonacci's on there. But normally, like as far as indicators, I don't use that much. And I don't think Rev does either, and Mitch is pretty much the same. I mean, at some point, you have to decide on a few things that work well, that have a high degree of efficiency, and that put together give you an exponential degree of efficiency compared to if they were just used on their own, which is another thing. Never just use one indicator or one strategy or one thing on the charts on their own. Put together, they have a lot of strength, but of course, anything by itself has quite a bit of a failure rate.
Hey, Mitch.
Hey, man.
Yeah, man. Move that picture out of the way that you got on there, and there's click on that great big old red race car right there. That happens to belong to me, and I'm just real proud of that baby.
Might as well show it.
That's right. I seen that in the background. I said, "Hey, that's our old Rev's race car there."
How do you drive that thing, man?
It's a blast, man. I mean, I might have one leg, but I've got a prosthetic on, so I mean, it's I see over the steering wheel on it. I might not see over that scoop. Well, I ain't got to worry about that no more because we got a new deal. But thank you for that. All right, so we're gonna work our way. And look, guys, I see people having questions about different coins. We got about 14 coins we're gonna work through here, and our next one up is ADA. And while I got Mitch's screen up here, we're just gonna let him jump right into it. And we got, like I said, we got several coins we're going to go over. I see people asking about XLM, and that is coming up. But we're working the ones that we've had trades in and so forth. So everybody just bear with us here, and we'll get through this.
Guys, just a second, Mitch. I think just to explain to people what we're trying to do tonight, we wanted to talk about Bitcoin a little bit extensively, just to let you know all the possibilities that we were seeing. So we've done that. The other idea that we wanted to cover was to cover a few of the trades that we either took during our live stream earlier this week or throughout the week during our sessions, and to show you how they played out. And then show you maybe a few that we did take and that we're still in and that are still developing, and then also a few that are either showing us some other things or that we're waiting for something to happen on those. So that's kind of the idea. We want to touch on a few different scenarios here.
And real quick, one more thing too. We talk about our indicators, and several of them brought it up earlier just before we went live tonight while I was in the trading room. You can get what I call indicatoritis. So too many indicators means you're flooding up your screen with useless BS that you probably don't need. Just because it looks pretty don't mean it always works. So We find things that work for us, but not every indicator works for every single coin, guys. And the ones y'all pulling off a trading view don't work for every single coin.
Yeah, I mean, for sure. Like, keeping it simple. I know we've gone over that a lot, but it's very important. But if we want to jump into ADA real quick, just because I know we got limited time, we got a lot of coins to cover. So yeah, earlier this week, Larley and me, we were, and several other members in the Hyped on Crypto community were looking at this. It was a clear falling wedge. There was no doubt about that. It broke out, and we got that one bullish engulfing candle right here. That was it, guys. That was the confirmation of the breakout. That was when you wanted to buy. But we had our stop set down here at the near the 5,000 sat level, because we kept it below the wedge just in case we tested one more time, fell back in.
And Mitch, did we use the exact 5,000, or did we go protect ourselves and use that 5,000 round number and put it a little bit below that, so that we can use that 5,000 number in Satoshis as a potential support to help protect our trade, right?
Yeah, for sure. I mean, so you just got to think about, a lot of people are setting stop losses, and institutions see that on the ledger. So what they're going to try to do is push the price down to trigger all those stop losses, so they get all the fees from those trades. And so then what'll happen is the price will shoot back up, and it'll be business as usual. But hey, guess what? All those stops got triggered, and they got paid hardcore. So you never want to be setting your stop loss at the most obvious point, because everyone's doing that. So what you want to do is set your stop loss a little bit lower. So yeah, we were around that 5,000 level. I mean, maybe a little lower. Fortunately for us, it didn't go down. It worked out wonderfully. We went to bed. We got to sleep, and we had our limit cells already in place. So we took our profit, 50% of it, at the 50% level right here. That's 5,500 sats. And then we took the rest of our profit at the 618, which is the most prevalent place to take profit on a falling wedge. So yeah, I mean, hey, look, we took our profit. We were out. We were looking at other trades already. It broke down, but look, oh man, we missed out. Oh my God. But look what happened. It's just chopping around at this point. So we didn't have to worry about it after we took our profit. We were already onto something else. We're already in other trades. These trades they've developed. We got stopped out on one, but the other two are doing wonderfully right now, and we're going to get into that a little later.
Yeah.
That's my take on ADA. What we did, that was our trade, and it was awesome.
Is that ADA or is that XLM?
That's ADA.
Yeah. Right. What's the difference? Because
they're almost exact. Yeah.
Yeah, these falling wedges, man, they're very predictable in a lot of ways when they do break out. When they don't break out, you get stopped out, no big deal. But the risk reward ratio is so nice with these.
Yep, for sure. And we probably had again at least 4 or 5 to 1, even if we took our profits at the first target, which is the 618. So even if we didn't ride the whole thing, we look at it as I call it trying to go get the two biggest parts in the snowman, right? You want to go get that big bottom ball and the middle of the body and that head, that extra. We leave it for the others. We're satisfied with doing 4 or 5 times, or even sometimes, and it depends on the type of setup. But these normally they're about those types of reward to risk ratios, and we'll take that any day of the week.
Someone asked me about why my fib was not at the top of the wick. It was here. And the reason why is because sometimes it's not always about the wick. You need to see what lines up best.
And you can see if you draw it from top to bottom, because you don't know where the breakout's going to happen, and you need to know if your fibs are accurate before then. You can even see if they respected those fib levels as they were going down in the pattern that you're looking to reverse. Now, regardless of that, even if Mitch would have moved his fib a little bit, the price still went up to that more aggressive 618 that you would have gotten. So,
and a lot of them, that's a lot on my fault, because you know me, guys, I'm going to put the wick in there, and I always do mine from the top of the wick, and you know, it's different styles, folks. I mean, it's not an exact science. I just include the opening and close, whether it's on the wick or you know, that, or the particular body itself. So that's,
but like if you look on my chart, I have the same exact thing there for ADA, and I went from the top of those 3 or 4 tops that we could see at the top of the pattern, and it still went through a little bit of the 618. So it's not like it needed to be right on the dot. Usually they're not. Sometimes they'll stop right smack on the line, but usually they'll go through a little bit, or at least wick through. And even then, in these patterns, what we see happening often is that they don't hit it just once. Like in this case, it gave you 3 or 4 hourly candles that hit it during a like 6 hour or 7 to 8 hour period. And at that same time, we were getting the RSI that was overbought. So, I mean, that was a good indication that maybe it was time to take profits, even if you hadn't put your take profit like us. And did some of our followers keep this trade and ride it to other fib levels or a near double top? Yeah, some of them did. Some of them scaled out at certain points. Some of them decided that they were going to just move their stop losses to protect their profits, and were willing to lose a little bit of their profits if it completely turned around in order to potentially gain more. And all those things can be intelligent strategies, but it's just, you have to go into the trade with how you're going to deal with it, like a trading plan, basically.
Yeah, so like with all that being said, do we have anything else to say about ADA, its state right now, how the trade went? Do you got anything?
Well, you know me by now. I think for me, it's always trying to find the most or the best price to go into. So to me, after I've already had that run up and that breakout and that big move, to me, I just mostly look at other opportunities. And
I'll take your money,
like in the last 2 weeks, as soon as we take our money from one trade like this and we go look elsewhere, we find another one. So it doesn't really matter if that one continues. I mean, I could let it ride in some way, like I said, by moving my stop loss up or scaling out and keeping part of it, like 20%. Or yeah, but to me, it becomes harder to focus if I do all these things instead of just keeping a few good trades that I know are great setups, letting them play out how I know they should play out, and executing my plan and then moving on. That's all. I don't question myself. I don't have fear of missing out. If it hits my stop loss, whatever, I'll still look at it to see if the trade is still potentially valid, and if I need to enter it at a lower price, if that's still okay. But other than that, I don't fret about it. It's just what it is, and there's probably like 1,500 coins to look at. So there is always something else happening.
all right. So there's no questions over in the camp. We're going to move right along to XLM, and while James has got XLM up on his screen there, let's jump right into XLM.
Yeah, so guys, similar setup. It's a bit more convoluted in this chart here because I had previous pattern. I'll take those out. So basically, if I drew a bottom trend line here, I would have a falling wedges. Again, same thing as we saw in a lot of coins. We waited for a break hook and go, which is, guys, a break hook and go is just if you have a trend line or a support and resistance line and you're looking for a breakout, we wait for at least one candle that breaks through that line, whatever it is, and close above it or below it, depending on the breakout direction. And then we wait for at least one candle to do what we call a hook. So it just comes back to where it broke out from and basically needs to retest and respect that breakout line that it just broke through. So that's the break in the hook. And then we wait for a go sign. So go sign can be a bullish engulfing candle in this case, because we're looking to go to the upside. So something of that nature. And we also try to combine these setups with oversold levels and maybe some MACD divergence in a bullish direction. So in this case, we got that, got into our trade, and I think 12 hours later, once again, I'll scale that up a little bit. You can see again, this is our 618 level, which is our target for a falling wedge. And we hit that once, twice, 3 times, and 4 times. Now, did we go higher? Yeah. And where did we go once we finally broke through and made another level? Like right smack on the dot on the 786. And then we went right to a double top, pulled back a little bit to the previous fib, and then we went to our extensions. So as you can see, these are tools that when we draw our fib retracement, that was from here, from top to bottom of the wedge, it gives us these targets. Those are settings that we use within our community. Those are settings that I've worked on and accumulated along the 14 years that I've been on this journey of becoming a trader. So as you can see though, they hit them pretty accurately, and the last time it hit them on the first move up, right to the 1618, and yes, they continued, but as you can see now, they're kind of doing a rounded top and losing momentum to the upside. So some of our members or followers will ask us, well, can it break out, can it go further? Yep, but for me, that's not where my best setup is. My best setup was way down here at a better price before it had this whole run up. I mean, if we count this price here, we were at about, let's say, call it around 4,000, and now we're at close to, well, 5,600. So I mean, that's a significant gain in a few days worth or a week's worth. So I know last year and at many times, some coins can see some pretty significant percentage moves, but this is quite significant on a 1 hour chart, and it doesn't mean that it won't pull back and that you won't have an opportunity to buy back in if you think this is a more long-term run, right?
James, can you zoom in a little bit? They're having a hard time seeing what you were talking about there.
Okay, so as you can see, we broke out, hooked, and we got our go signal. First go signal is here in this little candle here. So I'll put a little this here at the close of this candle. That's your first sign. And if you wanted a second one, kind of had one here too actually. But it doesn't really matter. And sometimes you can scale into these positions if you want to average in. But regardless, we hit the 618 once, twice, 3 times, 4 times, went to the 786, and then we made it to our double top, which was from here. And then we made it to, let's do it like this. You can see our lines for the fib extensions, these 3 lines, and look at how it wicked right there. And by then, we also were able to kind of build a little upward parallel channel that also helped some of our followers kind of, when it was pulling back, if they wanted to add or jump back in after taking a bit of profits, some people in our voice sessions did that. So I think that was mostly probably the best trade this week. Cardano ADA was really good too, but this one, because it showed you continuous momentum, some people were maybe able to extend that and ride it a little bit more.
Yeah, this is where the more aggressive trader would have benefited. Where you take your profits, that's great. You can take your 50% profit, your 30% profit, and then you can let 20% of it ride. And then that's how you can get these kind of gains. And that's when you move your stop loss up. But hey, look, everyone that's in this chat right now that's listening to us, we called this. We were watching this develop in our live chat in the Hyped on Crypto Discord, okay? So if you were listening to us, you could have been in on this trade And I mean, we're in multiple trades every day, finding new things every single day. So if you're not part of this Discord, I highly recommend you come and join us, because we're in there talking all day like we're talking right now.
Yes, I mean,
Absolutely.
we've had like, I mean, I think this week I had one day where we went 12 hours straight looking at charts. So I mean, we're not going to do that all the time, of course, because if we want to produce other things, that's not going to be sustainable. But it's something like, I mean, that's what we do. We're traders, and if you want to be a trader or look at what traders do and become a trader yourself, then I mean, I think a lot of our followers so far in the last 3-4 weeks or month can attest to that. And ADA was the same. If you go back and look at the live stream from earlier this week, ADA was something that we looked at live here on YouTube, and we took it and it played out. Now, these were probably two of the best opportunities this week. So as Mitch said, we normally find opportunities to trade pretty much every day. Now, does it mean that we need and actually go looking at the charts expecting that we absolutely need to take a trade? No, we have patience, but because we know what we're looking for and we chart a lot of charts, we do end up finding those trades. And we're starting to incorporate a little bit more of the tools that TradingView or other platforms are offering, in the sense that we can trigger alerts if we do get a breakout of a pattern that we had drawn that we're not looking at right at the present time. So as we set all that up, I think we'll become even better at finding these trades for you.
Yeah, absolutely, guys. And be sure to like and subscribe, hit the bell notification buttons. We're going to be firing up Hyped on Crypto's YouTube channel, and we're going to be bringing you the same stuff that we do right here on Rev of Crypto. And we're going to keep things moving right along as we're going to look at KNC, and we're going to get old Mitch to come up on KNC right now. Take it away, Mitch.
Yeah, so same stuff, different day. What's happening, guys? We got a falling wedge. I think someone asked me, they said, hey, is that a cup?
Zoom in on that. Zoom in on that. In, not out.
Oh, yeah, for sure.
I think he wanted to show the cup and handle question he
got. Okay.
I have Monero up on my screen. This would have been sexy. All right, so yeah, some people were like, hey, is this a cup and handle? I mean, it looks pretty, right? It looks very, very good. And it shot up and then came down. But look, it could be a cup and handle, but it is a certainty that we have a falling wedge, and that's all that matters.
Mitch, if you look at that bottom, that's mostly an inverse head and shoulder.
Yeah, you're right.
So, guys, when you see those jagged bottoms, and I mean jagged in the sense that it's not a nice, slowly rounded, sideways bottom, most likely what you're looking at is not necessarily a cup and handle. As Rev pointed out many times, as we talk about all the time, cup and handles are not that frequent. So if you guys are finding cup and handles every day, then you have to be sure or rethink what a cup and handle is, or check those a little bit closer. And as you can see here, this is possibly a very bullish setup that you could have taken way earlier than if you thought this was a cup and handle. I mean, the inverse head and shoulder had already played out by the time you thought it was becoming a cup and handle, and the move played out perfectly. If you draw a trend line there, like the neckline, make it a little bit lower on the right hand side. No, like just slant it. Yeah, because to go like right at the start of those two shoulders. So lower your left hand side a little bit. There we go. So that's your neckline, guys, on an inverse head and shoulders. Inverse head and shoulders for most people are just a little bit harder to see than regular head and shoulders. But unless you're going to be able to short in the crypto world, which we do have followers that are on platforms where they can short. So it means selling a coin and being able to make money if it drops in price instead of going up. But if you're only going to be able to buy coins and that's what you want to do to make money, then inverse head and shoulders is a bullish pattern. And can you draw or measure the height from the bottom of the head to the neckline, Mitch?
And we're not talking Head and Shoulders shampoo here either, folks. Just throwing that out there.
It's just a pattern like a falling wedge or other patterns that you might see.
About 6,000 sats.
Right. So the rule on a head and shoulder, guys, is the height from the line that he drew to the bottom of the head in this case. That's your target when you do break out. And if Mitch would measure where it broke out on those huge green candles and measures 6,000 Satoshis, I'm pretty sure we're going to be hitting our target fairly quickly. How's that looking? And it did go higher, so if it didn't hit it within 1 hour, it did hit it eventually. So, anyways, just something to point out that maybe if
you're profit taking level, if you're in it, it's a good way to just know, just like in the fibs.
Yeah. So, I mean, yeah, that's one thing to maybe keep an eye out on, guys. If you've been looking at a lot of cup and handle formations, maybe if you're good at identifying those rounded bottoms that have a little bit of choppiness to them at the bottom, up and down, as we see in this case, maybe that's a better way to look at things instead of looking for cup and handles all the time.
Absolutely. And sorry about the tangent, guys. I know we're trying to analyze this trade right here, but we wanted to throw in a sprinkle of education too. I hope y'all got something out of that. Learned something.
Always.
So with KNC, this is a trade. Well, we may have just gotten stopped, or we just may have taken profits, right? Because we had we had 50%. Is it what we did? We took 50% profit at the 50% fib level.
Yeah, so basically, because we could see, like, the real target is a 618 fib on a falling or rising wedge.
We just took profit. Like our first one.
So I don't know if you took 50% or 100% of it. I had set 50% to be taken out. Yeah, and the rest to be taken out at the 618. One of the reasons that we looked at taking a bit of profits earlier than the regular target, guys, is because if you look at the RSI and the MACD histogram, the RSI is already overbought. And it was about 12 hours ago the first time it hit that 50% fib retracement. And the MACD is not really showing much increased momentum at this time. So it's kind of even fading a little bit. So we don't want to push our luck. We've done well already in this trade. As you can see, if we again put our stop loss below those lows in the falling wedge, I mean, that again was a nice reward to risk ratio setup, and it doesn't mean that it can't go higher. We still have a portion of our trade that's aiming for that 618, and that's already set up in our exchange. So our prices are in, our pending sell orders are in, and if it hits that, we don't even have to be there to make that decision. So that's part of having a trading plan. So that's it, I think, for that one, as how it's playing out so far. So again, though, when we did get maybe you can show the break hook and go, Mitch, at the falling at the end of that falling wedge.
Yeah, absolutely. So look, guys, we broke, we hooked, and then we chopped though. So I mean, this is one of those where you make your decision to get in the trade, you set your stop loss, and then you go to bed, and then all this chop happens. And then one point, you're working out, you're running, stuff happens, all of a sudden, boom, it breaks out to higher levels. So that's why it's important. It's it's virtually paramount to be patient when you're trading.
Absolutely.
None of these trades are going to be happening like, within a 20, 30-minute period, guys. We're talking hours. And something else to think about, this gives you perspective. All right, how long did this wedge take to develop, guys? This is 120. This is January 20th. And so everything occurred 124. So this is a 4-day period of development of the wedge. Okay. So
yeah, if you use the ruler tool, from the first candle high there at the very top to the first break out of the pattern, that was 3 days and 20 hours. So almost 4 days, guys, for that for us to identify it, for us to wait for it a little bit, for us to see the break, the hook, and the go, and then another few days for the trade to happen. But do we really care? No. It was a nice setup. It made us good money. And during that time, like our XLM trade and our ADA trade were playing out and were closing and reaching their targets. And since this trade, we've also found other trades that we'll be talking about. So that's why, you don't have to be in a hurry with one specific coin. So this is cool.
It doesn't mean that you got to take every single trade that you see on every coin either. If you're set up good and you want to move in on it, feel free to do that. But, we look at a lot of coins every single day, but doesn't mean that we trade every single coin every single day.
Yeah, no, we don't chase either. And right. That's the problem, the FOMO. I feel so bad for everyone. Rest in peace, everyone who bought into Bitcoin during that mania. People that bought in at 19,000 took out mortgages.
Or Ripple or Tron or a lot of
my boss, my CEO, I got him in at 70-something cents in Ripple. And the day that it went up like over $2 or something, he bought in at like $1.83. The thing crashed back down. Yeah, man, like FOMO is very bad and it gets the best of everybody. But it's very unhealthy and it's going to catch up with you and wreck you. So
quickly, and we don't want to see. We want everybody to to make smart trades and everything. So if there's no questions over in chat, we appreciate everybody showing up thus far, and we're getting almost to the halfway point of this, and we're going to move into our next coin, which is Link. And
did want to interject just for a second. So we took 50% profit right here. We're still active in this trade, everyone, K and C. We're going to be taking the rest of our gains, and we will be at 100% exited from this position at the 618 fib level. So just wanted everyone to be aware of where we are in this trade.
Ooh-ha.
And that's spot on point right there too. So they're shooting for the mark, and guys, we're Joey. We're not going to. We got our planned list of coins here. I might be in the Discord shortly after this for just a brief little bit, because we've been putting in a lot of late hours here, guys, and we might take a look at a couple of coins, but we're definitely not going to be up all night. So moving right along to Link, I'm going to switch over to James.
Yeah, so guess what? Another falling wedge. And we're pretty much right on time here, because as you can see, guys, and I'll maybe zooming a little bit. So we may lose the pattern, but as you guys can see, it is a falling wedge. So I'll zoom in a little bit. Okay, so we can see more of the candles. So yeah, we break out a while back, right? And then we just ride along, meandering down the breakout line, right? So if you broke out and didn't wait for the break hook and go, you could have taken this trade, and probably if you put a pretty tight stop loss before the recent lows, you would have been stopped out. But there's nothing wrong with that in itself. I mean, you could have seen what is happening, and you could have readjusted, maybe re-entered here, where we could see a lot of rejection wicks at the bottom and a bullish engulfing candle here. Or you could have waited for really this to happen and really get your confirmation, then get in. But even if we lose a few hundred satoshis here on this one trade, if ever you did jump the gun, I mean, it's no big deal. I mean, most of our other trades make at least 4 or 5 to 1 reward to risk ratio, right? And I mean, we've looked at some trades this week with some of our members that had like 20 to 1 setups. It's just that falling wedges, they are really easy to find, especially in these types of markets. They are easy to plan because they have kind of set targets and they hit them with a high degree of probability, but they're not, although they're really good reward to risk, like 5 to 1 is really good, but there's other setups that have even higher reward to risk ratios. But so regardless, here we're starting to maybe see the push, and once again you see our fib levels. And one of the reasons, guys, we use these a lot is, first of all, they're respected all the time. Once you get us to show you, if you don't know already, how these work, I mean, most of the people we show these to and that start using them, I mean, they're just like within a week, most people are just amazed as to how these get respected and used all the time in the charts. We get these comments every day now. But what it does too is, if you draw those, first of all, it lets you build a trading plan because you have targets and you have your stop loss, so you can calculate how much you're risking and how much you stand to make, which you need to do if you want to be a trader. I'm not talking about a long-term investor. And then what it does too is, if it does go up, like let's say we start moving up, and we saw this on a few coins this week in these types of setups. Let's say it does start to break up and it hits that first fib level, that yellow line there. Well, do you think we're going to panic if we see a slight pause or pullback after it hits this level? No, we expect it. We know it's there, right? So, and if you go look to the left of the chart, while this was coming down in the falling wedge, look at how this line was used, like almost smack on the dot twice. And when we broke through, we came back to it and retested it. Now, so I get this question all the time. Do fibs work? Does any other indicator work? Should you use indicators or whatever? Well, to me, once again, if you're going to trade and not use indicators or fibs or whatever, to me, it's a bit like going to build a house with no plan, like no architect building you a plan.
No blueprints.
No blueprint, right? How are you going to figure out how to build that house? And if you build it, it's probably not going to be built very well, or not on a solid footing. So that to me is that for if we should use these tools. And are fibs the be all end all? No. Is the RSI the be all end all? Like if you see somebody trade only with the RSI and trend lines, please do not put too much emphasis in following or learning from that trader, please. So that's all I'm going to say. I mean, you put all these.
Wait a minute now. Let me back that up, because I will take trades, not all the time, but I will trade off the RSI. I mean,
sure. Yeah, they're on our chart. We use it too, right?
No, oh yeah. I mean, but not all by itself. No,
exactly. Yeah, that's what I mean, because I'm
picking with you,
right? We see traders. I think we all agree with that will just use the RSI. And so if it's oversold, I'm buying, and if it's overbought, I'm getting out. Well, it's not as simple as that, guys. If it would be as simple as that, they would have either made robots by now that can easily do this, or everybody would be easily trading right now. And as you can all attest to, I think it's not that easy to trade. Rev has been doing it for over 20 years now. I've been doing it for 14 years. And I think Mitch has been doing it for 5 years, and we'll all tell you that it's not as simple as using one indicator when it's above a certain line and using that same indicator when it's below. So that's what it is. So, but it does give you a nice blueprint, and it does also add the benefit of reducing your fear and uncertainty and doubt, the FUD, right? Because as you know that these lines are there, and that you know that ahead of time, you're not going to panic when it hits those levels. So that's what we're waiting on in this case. And like I said, we're going to be looking at this trade. Right now, for example, if I was to go to bed and I know I'm not going to be able to be in the front of the charts, I'm going to put my take profit sell order just below that 618, not right on the line, guys, because sometimes if it misses it by a few satoshis or cents, you don't want to be just missing out on your full opportunity because you want it to be greedy and get those extra 10 satoshis. So just go a little bit below. Maybe also if they line up with big round numbers, which is, I mean, in this case, it's near the 8,500 satoshi level. So, I mean, why not set it at 84 something, right? And just make sure that your order and your take profit gets filled. That's how we normally do it.
The key to trading effectively is being able to sleep, being able to take the charts off your mind and be able to do things with your life. Because if you're not doing it right, you're probably thinking about it all the time. And I know there's people watching right now that they have a ton of passion. They're learning. They're doing everything they can, and the charts are always on their mind. Because I was there at one point where you can't sleep. You're constantly on your phone in bed, trying to look at the price of the coin you're in. But when you learn how to set proper stop losses and proper limit sells, you can do that. You can fall asleep. You can go to the gym. You can go work, and you can concentrate on other things that have nothing to do with trading. So that is the goal. That is the tough part about trading, getting it off your mind, guys.
And real quick, and I'm going to switch to my screen. Real quick, I want to bring up a point about we talked about RSI here, and this is a prime opportunity right here, guys. And this is back on the 20th and 21st area. You see, it's above the 70 right here. This number right here, it's above that. That's extremely overbought. And these lines, these dotted lines here, represent a lane. Okay, let's call it a road, runway, whatever you want. But when this gets above here, okay, if you hadn't sold and you got your marks way high above this, just know one thing: when it's up above this 70 mark right here, it's going to snap back. Now you notice right here it didn't stay in the lane too long, but it's going to snap back. And if it goes back up again, that means it's really overbought again. And the closer you get to the 70 line right here, it means that it is overbought. When you get to the bottom down here, it means it's oversold. Anytime it breaks out above these marks, these dotted lines, be careful, because it's going to snap back in. It's going to get back into the lane at one point, and it's not going to be very long. It won't stay out. I mean, it can, but it's not going to stay out very long. If it gets out of them lines, it's going to get back in them lines.
Absolutely. And, most of the time when a coin, stock, currency, whatever, equity gets outside of those lines, a lot of the times they will get extended from their moving averages. And what I'd say a lot, I do like moving averages. I mean, they're not a big part of the formula, but they do tell us certain things. And stocks, coins, currencies get really elastic when they get extended from their moving averages. And that's pretty confluent with the oversold and overbought levels. So a lot of the times you will see the coin get extended from its moving averages when it's overbought and oversold. So that you will almost certainly see the coin snap back, like Rev's saying.
All right, so we're going to move right along. The next coin up on you, Mitch, is ADX.
And Rev, maybe something to point out, because I saw this comment not often on our in our community this week, but once, and it was enough to get a lot of my attention. Is I saw a comment from somebody that said that no one could have seen or predicted the correction that we would have gotten in cryptos.
Oh, man.
Well, I can tell you, my Bitcoins were sold before Bitcoin dropped. Did I sell at the most highest high? Nope. Did I sell at the perfect time? Nope. But I mean, guys, there are signs in markets that you learn to see and figure out that, as Rev was pointing out, when something's super overbought, when your taxi driver is telling you that you need to buy Bitcoin and that they're making or producing Bitcoin days on CNBC, that is a sign that we're in an exaggerated move. Nothing against Bitcoin. Not going to say it can't go higher. I love the technology. I love everything about cryptos. It's just that when it gets overdone, you can see it if you know what to look at, and then you can prepare for it accordingly. Now, to say that no one had predicted that is absolutely false. And if you were following people or learning from traders that can't spot these possible things when they're about to happen, then again, you have to go learn certain things or follow certain people that maybe can show you these things.
And it's really simple, this lane that we're talking about on the RSI, I mean, the runway, I mean, we can mark a center line right down it. Sometimes I do mark it if I've accidentally clicked it out or anything. But that purple area, guy, this area right here, if you look over here at the 50, that's halfway in between, 0 and 100? I mean, that's the halfway mark. But they're giving you a 30% average in between the two that lane's going to be in. So, the closer we are to 50, we're not overbought and oversold. But if you get north of that, you're getting to the overbought. Anything below the 50, you're getting to that range where you're in the range of oversold. But the deeper you get down, it doesn't mean it's going to snap back up and go outrageously fast. I mean, to the top, rocket to the top, or rocket back to the middle even. It just means that the conditions are going to reverse. And this area, if you're uncertain about anything, don't be uncertain about the RSI, because it's going to react one way or the other, and it's going to snap really quick down in these areas below the dotted lines or above the dotted line. So above the 70 or below the 30. So, don't always wait for it to get down below the 30 if you're trying to buy into something, because it's not normal to be down below this dotted line. When it is, when it's down here at the bottom and you're looking to get in, certainly get in as quick as you can if you see it, because it's going to bounce back up and you can get locked into that trade pretty quick, but don't be dragging your feet when you're doing it.
Yes. I agree.
Anything between the 50 and the 30 down here, I mean, yeah, the saying is buy low, sell high. Well, I mean, sometimes you might not get down to the bottom of the RSI line. You know, you're looking for the best setup that you can get into, whether it's at 44 or 32 or whatever. You're looking for the best that you can actually get into. So let's see. I think James, you're up for ADX.
And while you're explaining that ADX chat, where's everyone from? I'm just curious. You know, we got like 74 people watching. Are y'all like from different? Y'all all from America? Y'all from outside of there? Like, let us know while James is explaining ADX.
Yeah. So yeah, pop up those comments in there, guys. And I'm gonna do a few things on my chart. You can show my chart already, but I'll show a few things that we were looking at this week and how I ended up adjusting my trade and basically exiting this trade on a break even just because of what the chart was telling me. So it's not that I was form fitting it or that it was a loss or that it couldn't have been a good trade for me, which probably would have been the case. It's just that it was kind of showing me something different, and I preferred to just break even, close the trade as I was unsure what was going to happen, and move on to something else. So let's see here. I'll just remove this.
Someone's from the moon.
The moon.
Yeah, they're from the moon.
I'm going to throw up where I'm from. I'm from my mama.
I'm from Atlantic Canada.
Goodness gracious, man. We're all over.
Nobody got what I was trying to throw a little bit of humor in there. At least y'all could laugh, guys.
I didn't get it.
You didn't get it? Where are you from? I'm from my mama. Mama.
Oh, I didn't hear that. I didn't hear that. And guys, why limit yourselves to the moon? Like,
yeah,
I like that saying.
Yeah,
like why not Mars or Pluto? Or
I'm on Mars with a red coin.
So like,
Range
do y'all see where these guys are from? Like we got folks from Norway.
Yeah.
Someone said Cuba. Is that real? Someone's from Cuba here.
Awesome.
Yeah, that was
Lake Tahoe.
Glad to have you all with us, guys.
Yeah, really do appreciate the support, guys. Like this is why we do it. We're doing it so you can learn how to be a better trader.
I mean, I don't know if you guys, well, probably a lot of you can see that, but we just love this stuff. So I saw a comment earlier when I said, because somebody said when that bots could do this, and I'm not going to argue with you, but if people could build bots that can do all this perfectly, and some institutions do have algorithm traders, but most people that are selling bots in this industry, if they had a bot that was really working, they wouldn't need to be selling it to you. So I saw a comment following my explanation of that saying, well, why do these guys have donation links, right? Well, yeah, we do it and we love doing this, but it's still our time. And it's still nice to, first of all, a lot of people like and want to give to somebody that's helping them. So that's the first thing. So we want to give that option. And second of all, I mean, we do spend a lot of our time. And although we don't do it for the money like other people, we trade, so we make our money. It's good. But I mean, it's still nice, and it's still a big portion of our time that maybe we could be doing something else with. So we love doing this. We're going to continue doing this, whether you donate or not. But just to come back to the bot thing, if these guys that are selling you bots, if those bots would really be working, they would just have to go get leverage with a bank or a broker and leverage that bot up, and they'd be set for life. So no real need to sell you a bot that they could just use for themselves. But so yeah.
I am a robot. I will help you. I'm just kidding. All right, so we're gonna get into ADX now, and thanks for everybody that is from Peru. Oh, we got one for Peru. I seen Singapore up there. all you guys
all over the world, man.
Yeah, exactly. And I'm glad.
Hey, you get Raleigh, North Carolina.
Hey, there you go. I'm down in Fayetteville there, Albo. I'm about 45 minutes south of you there. So, anyways, thank you. And I can't talk when you talk there, Mitch. It gives a real bad echo. But anyways,
wait, what?
It gives a real bad echo when on your end when I'm.
Oh, my bad. I'll put my headphones on.
Oh no, you're fine. But yeah, it's yeah, we do beer, liquor as donations. So yeah, feel free. Yeah,
especially on Friday nights. Is that it,
Yes.
Rev?
Yeah, damn Skippy.
So yeah, ADX basically possible falling wedge, but I thought it was a bit steep, and the top slope only had like a few touches, so not as proven as we would like. But we did get a break, and we did eventually get our pullback and our confirmation candles to the bullish side. But as we saw in maybe one of our other trades that had moved sideways quite a bit before it started popping up in the direction that we expected, for me, when I saw that, it kind of like what I went and did on my chart, and I'll zoom in a little bit. Come on. So after it broke out of the triangle, came back, or the falling wedge came back in, just started moving sideways, I thought that I was seeing some sort of a pennant or symmetrical triangle after a big downwards move. That has possibilities of breaking to either side, and the likelihood is that it's a continuation pattern. Okay, so what I did is I had taken that falling wedge trade long, but because of what the chart was showing me, I decided to not take the risk in this case and close my position at break even while I was still in this pennant here. Now, it did end up kind of working out and made it to the 382. Like again, guys, smack right on it. Second time, and then it made it through and tried the 50. But as you can see in this one, and this is a reason, guys, where sometimes we say, yeah, the 618 is the most often hit target for a falling wedge, but it doesn't mean that it can't hit the 50 and just turn right back around and never even come back, at least temporarily, until maybe you hit your stop loss. So sometimes that's why we'll keep an eye out on it for lack of momentum or overbought signals and maybe sell. Or sometimes we'll put that in our trading plan and our sell orders for take profit ahead of time. So that's a good example of that. And as you can see, we pulled back, and now we came back to test that 50 again. And once again, almost like every time, like huge reversal candles, not completely bearish engulfing candles, but very close. And both times, guys, and once again, that's to come back to the RSI, both times touching that 70 overbought line. The first time we just touched it a little bit. The second time we crossed and went above it. And I mean, that's where it's sitting at right now. And some of, like, I had taken this trade. I think Mitch was in this trade. I think one of our leaders of this community, Mr. Allen, was in this trade. So I don't know if he's still in it, but
That's my ADX. Allen was in the ADA.
Oh, well, I thought he had taken.
I think you and me were just like duo in this one.
Oh, so we were just soloing this one.
Exactly.
Okay. Well, anyways, so that's how it played out for me. Mitch, did you keep this trade and take some profits? Or are you still in it?
No, I know when we talked, you kind of freaked me out. So I mean, it was ascending. I think I made out with a little bit of SAT profit. So I kind of canceled my limit sells and my stop losses and just kind of got out just because the momentum was drying up. But did you show ADX was the crazy one, right? That had that big rejection bearish candle right at the 50% retracement level.
Yeah, that's what I just talked about. So
Yeah,
the
man.
first time it hit it, went a little bit past it, and turned right back around with quite the big candles there. And then we pulled back and tried again, and this time it really respected it. And so far, we just backed down a little bit. But you guys can see, like, they go back from fib level to fib level, and speaking and touching on what Rev was pointing out a while ago about the RSIs, yeah, it might make it to overbought. That doesn't mean that the next step is to go to oversold. In this case, for example, it made it to overbought the first time around here, and then it pulled back. It had its pullback. It didn't go all the way down to oversold, but it had to. That was a healthy pullback, because if it was going to continue moving up, it couldn't continue that far up or that quickly if it was going to be overbought already. So now we're seeing it had a healthy pullback, tried a second time, and now it's overbought again. And what do we see? A slight pullback. Now this may be giving it room to make it on the next push up to the 618, which is the actual target of this whole trade, or even higher. But sometimes that's what you have to keep in mind with the RSI. It doesn't mean that it's just going to go from top to bottom without little healthy pullbacks and more extreme overbought or oversold levels in the present terms.
And just to clarify everything, when we talk about snapbacks and everything above them dotted lines, what it's trying to do, whether it's at the below the 30 or down close to the 30 or above the 70 or close to the 70, it's trying, and if you look, it's trying to get back to the middle. It's trying to get back to the 50 is where it's trying to get to. Now, I don't always make that sharp leap back to the 50. The pullbacks will, and show what we're talking about there with a slight pullback, James. When with a slight pullback, and slide over to your left a little bit more, James, if you don't mind, please. Well, no. Well, I mean, with your cursor there, just go across and line up on a date, so to speak, and show where it lines up with everything.
And would you like me to put a line at the 50 mark?
Yeah.
In the RSI?
Yeah. That way, see, he's lined up, and he could have done that in the settings on that. So
yeah, that's doable.
So line up on a date real quick. Just pick a date. All right, right there. You see how it took its nudge down there in the RSI. It's below the 50, and the next day over it come back up. So slide over one to the right there, James. 1 day or 1 hour, and seeing that hour, it's pulling back up to the top of the 50. So when it pulls back, as it did in the previous hour, you see it's down low. Now it's going back north because we got a green candle there.
Yep, for sure.
So with that being said, it's taking it's making a move. So, I mean, it's not going to be severe. Sometimes it can be severe because of volume. You got to look at volume.
Yeah, and as you can see, if I put a line at this point, like right here, just a second here.
It's a little laggy with the screen share, right?
No, it's just that sometimes if I need to keep the push to talk button, I can't really click my lines correctly. So Okay, so just to identify what Rev was talking about, if you follow these lines here from the RSI to in the price action in the chart, as you can see, the RSI dipped back below 50 on our first point of reference here, and then it just starts slowly moving higher, crossing that 50, and eventually popping up a little bit and reaching close to overbought. Now look at everything, and it was showing you that on the price action. Was it doing much on the price action? No, it was pretty much doing the same thing. And the MACD was also showing you the same thing. Not much increased momentum, even almost really flat momentum, no momentum, like close to the zero mark all the time during that period. So those are all things that you can take indications from. But then again, that comes to the same thing we always say. It's not just the RSI, and even the RSI itself is not as simple as just overbought, oversold, right?
Yeah, and it's going to fluctuate. So I'm glad we took the time with this one right here to show what we're talking about, because I felt like that was a good time to bring that in about the RSI and what we were talking about earlier, and but it's going to stay in between them dotted lines. It wants to. I should rephrase that. It's not always going to stay inside of it. Of course, it gets out. But when it starts getting north of the 70 or below that 30, you can rest assured it's going to find its way back in the middle at some point. Inside the purple.
It's a bit the same principle as the Bollinger Bands, right? A lot of people will use the Bollinger Bands, and 95% of the price action is going to happen within the Bollinger Bands. So it's a bit the same thing here. Now, is it an exact percentage? It's the majority of the price action that's going to be done within these RSI levels. And some traders, like I think we talked about on our previous live stream, some traders will use more extreme overbought and oversold levels. I've seen traders use the 80 and the 20 instead of the default 70 and 30. So when they see an overbought and oversold signal, it is a more conservative approach, because they know it's really overbought or oversold compared to a 70 and a 30. And I've even seen people use a 90 and a 10. They just don't get a lot of trades off of that.
Your stochastics, the 80 and the 20 is those are the important ones on that indicator. So it's pretty interesting that people would use the 90 and the 10. That's crazy. But
insane.
You can get, the thing is though, with the RSI, it can be tricky, because if you have a pretty severe downtrend on volume, a downturn on volume, you can get the bull traps. You can get trapped into those trades where, hey, it's going to bounce back, but immediately get rejected and continue its trek down. So.
Oh yeah, and you'll notice the price actions in the RSI. I mean, every time. I mean, you get down there, or volume, I should say, you're going to see when it's lagging down there after it's been sold off heavily, and it might just track down there at the bottom. It might take a while for it to move back up close to the 50.
Hey, while we're talking, hey, chat, are y'all having a decent time this evening? I just want to know, answers, feedback, if we're doing an okay job. I mean, I know we're giving breakdowns of charts and stuff. We're also trying to educate along the way, with these charts. So do you think we're doing okay?
Yeah, good point, Mitch. If you guys, we like to teach as much as possible, because we know what it means in the end as far as making you proficient traders. But if you guys maybe don't want to focus on that too much and want to see a little bit more charts, we can adjust the pace a little bit to a certain extent. We're not just going to go through charts randomly and too quickly that it doesn't give you reliable information, because that's not what we're about. But at the same time, we can maybe keep, if it's not what you're looking for, maybe we can keep this education stuff or the more in-depth stuff for either on the Discord or through classes that we might build in the near future. So feel free to let us know, good or bad. We are not hurt by those feedbacks. We really appreciate it.
We hadn't lost nobody yet, so I mean,
That's good.
And it's great, and we appreciate you guys. It means that we're doing something here, and that's what we're here for. And this clown show, it goes on every single day in Discord. I'm calling this clowns there, by the way, guys. We're Barnum and Circus.
Okay.
You can catch us every day.
Hey, Lassie, thank you so much for that, man. Insanely informative past few streams. Really appreciate it. Al said, amazing job, guys. Haru said, chill. And y'all are amazing. Keep up the education. We will. We really will. Thank you, Heidi. I hope I said that right. I'm sorry. Wicked said, I'm enjoying it. Dude, y'all are amazing. We really do appreciate the feedback, guys.
And one of our regulars, Daywalker, just made it. It seems like he just got here. So welcome, Daywalker.
Now everybody's loving my car. Thank you, Brendan. I do appreciate it. That's my toy, y'all, and you'll be seeing a lot of it. Thank you, but I'm very humbled, and I know these guys are too. And we put a lot into this, and we're going to move on to our next coin, which is sub. And who wants to tackle that?
I can touch on it because it was brought up in either yesterday's session on Discord, like our voice session chat, and if it wasn't yesterday, it was at most the day before.
I just got to throw this, James. I got to throw this out. Somebody just popped in there. Even Naeem is here learning. Oh my God.
Well, it probably would help him quite a bit. Sorry about that.
Yeah,
case.
I thought it had to be funny. And everybody, I want to touch on that a little bit while he's setting up here. The other morning, I went on a little rant, and I do appreciate everybody that saw just while it was briefly up. And I'm not going to be getting excited no more. Some of y'all do know that I will be going underneath the knife here in the near future. I am having open heart surgery. I don't know the exact date yet. It could be as early as next week or next month or the 1st of March. I don't really know, but it's coming. So I appreciate y'all keeping me in your thoughts and prayers going forward. But we're not going to concentrate on that other group, and Rev's going to be a little bit more chilled. So
we'll try to keep it more chilled. But we love the enthusiasm and the things that you stand up for. So I think it's all good, and I think we have a great team here. So yeah, a bit the same setup here, guys, on sub. It was brought up by one of our members in a voice chat, so we charted it for them during the voice session yesterday or the day before. My memory here might be having a bit of an issue, but if I look at the breakout, it's about, I'd say it's within a day. So what we had done is we had some sort of either a parallel channel downwards or a falling wedge again. So what we did is, because we were still within the pattern, we simply put that top line, we explored both options, and what we did is we went and set an alert on our top line. So any line in TradingView, you just can right click on it, and you can go set an alert. I'll use another line because this one had already had an alert.
Yeah, unfortunately with that, you have to be pro for the alerts. So sorry.
Okay. I mean, it's not that expensive, and there's a lot of nice things that come with TradingView. So, I mean, you can check it out, and I think it has a 30-day trial anyway. So if you guys want to, but it's certainly a tool that if you can afford, it makes your job way easier, and you don't have to spend as much time in front of the charts. Because, for example, in this one, we put the alert for it to notify us either by SMS, which is text, on your cell phone, or email, or even pop up on your screen, both with the pop-up screen and like a sound alert. And when it did break out, well, we could have tried to find an entry here, and again, we're still looking at this one playing out. Now, problem is on this one, and I did look at that after the fact, after I got the alert, is that we were already being overbought on the 1 hour. Now, that's just a 1 hour, but we also got a bearish engulfing candle here. So a bearish engulfing candle, or just an engulfing candle in itself, as you can see, we had a big green candle, and then the next following candle is completely reversing the full move of the previous candle. So that's what we call an engulfing candle. And in this case, because it was the red candle going down and reversing the previous move up, we call that a bearish engulfing candle. And if it would be the opposite, we would call it a bullish engulfing candle. So for those reasons, that's probably why we're trying to see maybe the trade consolidate and move sideways a little bit, and that's normal. As we can see again, we hit the fib, we come back to the previous one, and where do we hit again the next time? Right there, and now we're just moving in between. So that's to be expected if you're going to take that trade. But if you know it ahead of time, then you're not fudding around and worrying about your trade.
Hey, Larley.
Yes, sir.
If we're looking at the 30-minute chart, do you think the 30-minute chart gives us a better way of seeing if there's a hook and go? Because sometimes we don't always see the hook and go on the 1 hour.
Yeah, absolutely. So that's a good point that Mitch brings up. Normally, we'll try to chart at least on a 1 hour, and that is something that I think us three analysts really recommend that you guys do too, is not drop below a 1 hour, at least for now. First of all, the higher time frame charts have way more significance. Like I say all the time, big bag floor traders don't even look at anything below a 1 hour chart, and they establish the bigger patterns and trends on 4 hour charts. And big support and resistance levels are established on daily charts and also on 4 hours. So in this case, though, sometimes what we do is if we want a more accurate entry, or to see if we did get that break, hook, and go that we look for after a breakout, sometimes we won't see it on a 1 hour, because in that 1 hour candle, it just could have gone down, touched the line, and then went back up in the same candle, which we kind of see here. The only thing here, it's a bit different because we don't get a green candle to come back, but that's because the first 30-minute candle they broke out came right back on the line and retested it with a big rejection wick there. But if I dropped even further to 15 minutes, we would probably see that. So as you can see, guys, we get a breakout. We close above that line. We then get a massive rejection wick and a red candle closing right near our breakout line, and then we get a bullish candle, again with a wick trying to go through our breakout line and respecting it, and then we start moving up. So that's an example of why you can use the shorter time frames, but as we always say, we drop to these time frames after we know we want to take a trade, or after we are in a trade and we want to add accuracy or more preciseness to our entries and our exits, if that makes any sense to all you guys.
Makes a lot of sense to me.
Rev, you good?
Yeah, so there's another trade we're in right now. We got Monero.
XMR, guys. So Monero is something else that we got into throughout the week. So maybe Mitch, if you want to... Is Rev still with us? Did he...
I don't know,
Yeah, I'm still here. I was going in order. Strat was next.
Okay.
Okay.
Well, do you want to, since Mitch mentioned Monero, do you want to share his screen and he can go through it while we're at it, or?
Yeah.
Okay, thanks.
Well, he brought back Strat, so.
Oh, well, whatever you guys want to do.
That's fine. Go ahead.
We're at Monero. It just may not say that. So yeah, anyway, so Monero, this is an active trade. This is something we are in. This is something we talked about in the Discord chat, guys. If you're not part of our Discord, I highly recommend it. Hyped on Crypto. We've got mods in the live chat right now that are linking that Discord to you. So please join us. We're in Traders Talk. We're in there all the time, pointing out potential breakouts, and we also point out when the breakout occurs. So please join us in Discord. But
yeah, the links are also like in the show more section below the live stream and on YouTube if you guys want to find them.
Yeah, so we got the same old stuff with this. We got a beautiful falling wedge, and we had a breakout. And let's zoom in a little bit. So we had the break, we had the hook, but we were waiting for the bullish engulfing, and here it was, guys. Here was the bullish engulfing candle that we were looking for, and the droids we were looking for. And then from there, we went long in the position. We had our stops somewhere down here. We still have them down here. And sure enough, time went by. We went to sleep. I was working. I was on sales calls. Everything was happening. And then boom, we have a huge, huge green candle. Kind of had a rejection candle at the 382. So now we've fallen below the 236, but we're still in this position. We're just letting it develop. Again, guys, look how long it took for this wedge to happen. It took a long time to develop. We're looking at the 20th area all the way to the 26th. So we got almost at a week-long falling wedge. So that should tell you and give you perspective on how long it may take for our trade to develop. And I mean, almost in no time, we're already at 382. So this could extend on and chop and chop and chop. And then we break again to the levels where we want to take reasonable amounts of profit, which would be at the 50 fib level and the 618. You can do a 50% here, 50% here, or you can do 50, 30, and let 20 ride. You bring your stop loss up to these levels to ensure that you protect that 20% that's riding. And then you can also set a limit sell on that 20% at the 786. Or if you want to be really, really greedy, you can set it at the 100% retracement levels. So, yeah, guys, we're in this right now, and we're looking to make some money.
So once again, guys, that also goes to show like there is overall market correlation again, right? So a lot of our followers or the comments that we see, well, for like 3 weeks ago, well, everything looked the same in the charts. Everything was falling and correcting. Well, yeah, everything that is part of an overall market, so in this case, the individual coins, or for example, if you look at the stock market and the individual stocks participating in that market, if the overall market is in a bearish sentiment, correction, downtrend, whatever you want to call it, the higher likelihood is that the market participants or the trading instruments within that market will also be affected by that. So it is often the case that you will start seeing the same types of patterns in a lot of those trading instruments. And that's what we're seeing here now, right? Right now, you're learning about falling wedges with us over the last 2-3 weeks because that's a lot of everything that we see. Now, if markets start going up in February or March, and that's something else that we should have touched on earlier when we talked about Bitcoin, and that we had discussed amongst ourselves before the live stream, is that we all know, and we've seen, I'm sure all of you have seen some graphs and statistics as to how normally the end of the year and the first month of the year is most often a correction in the crypto market. Well, we're almost nearing the end of the month. So now we're going to move into February and March. And maybe this is, again, the start of the move up, right? So now, if you're looking for falling wedges all over the place and we're really in a big upward trend and everything is correlating to that upward trend movement, well, these types of trades might not be, first of all, as frequent for you to find them, or they may be completely wrong when you see them. You might think you're seeing those because you've practiced those for 3 weeks or a month or 2 months, and that's what your brain is now used to seeing, but it doesn't mean that it's that. Maybe we'll start seeing other types of patterns. This week, we started seeing a bit more symmetrical triangles. And so always keep that in mind, that different market environments or different time frames will show you different things, and different tools and different strategies can be applied in those different types of markets.
Yeah, so I mean, with Monero, I think I'll be able to go to sleep tonight knowing that my limit sells are here and my stop losses are down here. So,
yeah, pretty much the same thing as a few of our other trades that are still in, right? So
yeah,
pretty simple setup, guys. Once you get to go through it a few times and we explain it to you. So yeah, same thing there.
and are we still on my screen right now? Okay, so yeah, we were wanting to see STRAT. That was another one we saw. I was kicking myself really hard for not being in this. We had, I don't know who it was. It was just an anonymous hero who said something about this. They asked for an analysis, and here it was, a nice huge falling wedge again. And something, guys, look what's going on here. We have a falling wedge after a bearish downtrend. When you see a bearish downtrend and then a falling wedge, that is a reversal falling wedge. So look what happened. We broke out. Good news, everyone. We look what happened. We tested the support multiple times. We chopped, as it should happen. These trades take time, guys. Just remember, it's not a 30, 20-minute thing. It's going to take time. You rest, you go to the gym, you work out, you go to work, and then boom, your trade takes off. And if you had your limit sell here, you've already taken some of your profit. And look, guys, look how we whipped up at that 618 fib level. You'd be 100% out of this trade, and you'd be cash money if you were in this right now and you had your limit sell set up. And we talked about this in the Discord chat, guys. So just another wonderful textbook falling wedge after a bearish downtrend reversal pattern. And look at that volume. Jeez, man, that's a lot of volume compared to what we've seen. So, but if you stick around with us, guys, you're gonna get these. We're going to tell you about these. We've been very open and transparent about our positions, where we are, what trades we're in that Discord. So please join us if you want to make some money, because we can definitely help you learn. We can give you the fishing pole that you need to catch the fish versus just giving you the fish, making it to where, hey, yeah, you're seeing charts, you're seeing trend lines being put on the screen, and everything's sexy. Let's look at the long-term outlook of this coin. Nah, man, we're looking at the short-term outlook here. This is how we do it. We're doing actual trades that develop and make money.
Yeah, and to touch on Mitch's point there about us like being transparent about our trades, we will be transparent about our trades, but at least not right now. Anyways, we're not gonna give you exactly trade alerts or trade signals as to exactly what to do. We want to show you the potential in a trade, what we think how you should be setting up your trade, your trading plan for that specific coin. We give you different strategies that you can take, whether it's taking all your profit at one spot, scaling in, scaling out, using a trailing stop loss and letting your profits ride. So there's all sorts of ways to do it, and there's no perfect way for everyone, but we will show you all those possibilities, and then you just have to adapt that to your own personal trading circumstances. But I was just going to say on Stratum, if we zoom in and on 1 hour, if you want to zoom in on my chart, I have kind of a different little pattern here that maybe we haven't talked about too much. So basically, you see, we were just meandering down like Mitch pointed out, and then we get the big breakout here. Well, this is an impulse move up, but briefly we go overbought, right? But there's a lot of MACD momentum behind it, so that's a good sign that this continue. But once again, RSI is way too overbought too quickly, so it has to pull back a little bit. Is it going to go right back down to oversold? Probably not. So what I'm going to draw here is just a pennant or symmetrical triangle at the end here of the impulse wave up. So just give me a second here.
Guys, if you want to know the difference between a symmetrical triangle and a pennant, pennants are normally really short term, and symmetrical triangles can be really, really long term and really large. But the pennants normally come after a large uptrend or a large downtrend. So just keep that in mind.
Yeah, and we will have resources to explain to you every pattern and what they're supposed to do when you see them and what they mean and how to spot them and all that. So in this case, though, normally a pennant most times will be a continuation sign. So in this case, we went into this little formation by having an impulse wave up or leg up. And now we're just doing this little thing here, this little pennant. So the higher likelihood, not 100% of the time, probably not even 90% or 80%, but the majority of the time it should break to the upside. So now it's just moving slightly along in this pattern, and we're letting the RSI breathe a little bit, and maybe we could see another push. And as Mitch had it as the falling wedge trade, we're probably just following along the fib levels. I could maybe try to draw them quickly. And guys, I mean, if you want more accurate than that, you just saw me do it. I didn't fudge around with it to get the lines to line up. I just went straight to the top, to the bottom, and look at how these line up. So if you ask me if fibs work, well, there you go. And you'll see that every day with us.
Larley, that was an astute analysis, sir.
Did I just get lucky? No. These things, guys, happen all the time. Like I told you earlier, some of our followers that have now learned these things are almost amazed, and it kind of boggles their mind. Like some people call they call our fib tools and the way we do it, they call it voodoo sometimes. So that's kind of the inside joke, but it just goes to show, once again, didn't even have it on my chart, and we just go from the top to the bottom, and as you can see, pretty darn accurate.
Yeah, this looks really nice. Strat's probably going to continue. I'm going to give that one to Larley because I missed out on that, and he's in that one.
Yeah, so that was a particular one because, okay, so I'll show you my chart more zoomed out. I know you won't be able to see all the candles and all that, but so there's a few possibilities here. We had the possibility that we had a big triangle formation, symmetrical triangle. Guys, symmetrical triangle basically doesn't have to be perfectly angled, both slopes in the same direction, just that one line is going down and the other one's angling up. Now, in this case, what was happening when we saw that yesterday breakout for the first time, for me anyways, it was just that, as you can see, when we got the first breakout, if you see where my line is lined up with the MACD and the RSI, we had one or two candles outside the triangle, and we were already almost at the 80 level of RSI. And some people wanted to jump in, and maybe we were live in the voice session while that happened, and I was like, for me, that's too quick, too fast, already too overbought, and I have to wait. So either I wait that it comes and retests our line, and I'll zoom in now. Right, so which it did, and then it gave us that go candle, so you could have taken it there, but it's more aggressive. It's not the same thing exactly as a falling wedge, because your stop losses might be further down below the recent swing lows. In this case, around this marks here, almost a triple bottom. But the thing is that the target for a symmetrical triangle is not only as far as the 618 fib retracement that we use, for example, for a falling wedge. Normally, you want to trade the height of the triangle. So I'll go back and show you this. So depending on the trader and the aggressiveness or how conservative they are, you can measure the height of the triangle. So most normally the back of the triangle, and you use the ruler tool. And so I can measure the height, which is once again about 4,900 Satoshis, or if we want a round number, 5,000. So what we do is when it breaks out and it gives us that confirmation that it's broken out, that's what we can add to the breakout level to use as a target for the measured move that we're going to get. Now, some people will trade maybe 50% of that, or they'll try to aim for, let's say, a double top or just reaching the top of that triangle again. And some people will trade 60 or 70% of that height. But depending on how aggressive you want to be, you can trade the full height of the triangle as well. So if we broke out at, I don't know, 5,500 and the height of our triangle is 5,000, then we can aim for around the 10,000 or 10,500. And in this case, we can see that if we go to the near 10,000 Satoshi level, it's going to be at our most recent highs around this area, right, that we see is 10,000, which is also a fib extension if you look at the green line. So that's kind of how we took it. I took it when it bounced back in and then broke out the second time, which I'll zoom in again. So what I did is, instead of jumping and being scared I was going to miss the trade, I waited for it to come back. And even then, it was still, for me, almost overbought already. So what I did is I waited for it to come back in the pattern, come back here, break out, give me the hook and go again, and then I bought it. Now, is it positive right now? Nope. Is it a big loser right now? Nope. Is it still valid and likely to work in my favor? Probably, but that's how we played this one out.
Heck yeah. Hey, I get an idea.
Does that make sense to you guys? There you go.
Yeah, and if anyone has any questions about this stuff for Larley, or if anyone has any questions about what I'm analyzing, what Rev is analyzing, guys, we are in that Discord. It is being posted in the live chat that for YouTube. So please join us, and we'd be happy to answer any questions you have in that in the chat, and so where you can talk and engage with us versus just typing. But I'm looking at it. I don't really think we have any coins left to cover. Do you think it'd be cool if we got the chat's opinion, see what a general consensus would be on what they would like? 3. I didn't get the augmented script and the updated.
Mitch didn't prepare his watch list correctly, guys.
I had to go to a movie. Okay.
Yeah, he had other obligations, I guess. ICX was quite a mover this week, right? So Well, look, I just pulled up my chart for AST, so if you want to peek at my chart, I mean, it's pretty straightforward. Pretty much the same pattern. So we're there now. Okay, so again, guys, falling wedge, fib from top to bottom, broke out, and look, again, hit those smaller fib retracement levels, and we respected them, went sideways within them for a while. And again, keep in mind, that's also while Bitcoin is going up and down. So that's kind of normal to see that in the other coins as well.
That chop, yeah.
Yeah. But look at, after that, how it went straight up to, well, even further than our 618 target, 786, and then right to that double top. But as you can see, at that double top, we were way overbought, and it was a double top, and it got rejected right away. So, I mean, in those setups, normally, if we do try to extend our take profit targets, those are normally like the, if not the last level, one of the last levels we'll be looking to aim at. And it played out after the brief 1 or 2 day sideways move. It did play out really quickly.
Yes, pretty insane run up. I can't believe that 100% over 100% retrace. That's
because if well, let's see, let's measure it. Just from here, for example, to the top on the first candle, that's 6 bars of 1 hour. So that took 6 hours. It was a 30% or 29% gain, if you want to be accurate. Just from that level. And that's not even when we would have entered, because the breakout and the hook and go was a little bit lower. But just to give you an idea, so to those who say that there's not great gains to be had currently in the markets, well, this is a trade that kind of goes against that thought. Mitch, I think you could probably cover that one. You had charted that quite extensively.
yeah. So with ICX, my God, we were seeing, it looks crazy here because we had it drawn up. It was pretty tame. Look how many times it tested these levels. It showed us confirmation it was in a falling wedge, but then it breaks out of the wedge. And our fib levels were different at the time. Our fib levels were.
But something to keep in mind, guys, Mitch is mentioning the wedge, and that's a good example here of a trade that you have to be careful of always drawing wedges, because this could have also been a parallel channel, which now me and Mitch have on our chart. But when we first charted it, that's not what we had. Now, I didn't take that falling wedge trade just yet, because as soon as I could see that I could draw a parallel channel, I wasn't getting the breakout and go or hook and go that I needed to take the break of that. And this parallel channel downwards, like we're seeing here, is basically called a bull flag. Sorry. So we had the big run up, then it started consolidating sideways, slowly going down in this parallel channel, and this is normally a continuation pattern, so it should break out to the upside and continue higher. So for your first target could be like the double top near the, what is it, like about 8,500 Satoshis. And then we're going to get, if you have your fibs on there, like you probably had fibbed your wedge from top to bottom.
Yes, absolutely.
If you switch to my chart, Rev, if you don't mind. For some reason, my scale is not moving.
Get scaled.
Yeah, it's the first time it freezes up. But anyways, Mitch, maybe you can do it. You see what I have there, right? I had fibbed the last big leg up from about the recent lows, about at 5,300.
Oh yeah.
To the top, right? I just wanted to show people the extensions at the top that I can't see on my chart, because a bear flag like a bull flag like this, if it breaks out to the top, your first target is probably the most recent highs, like I said, around 8,500 satoshis. But after that, we would be aiming for our fib extension levels that Mitch is going to show us here.
Yeah. So when we plot our fibs from bottom to top, we're looking for support levels, guys. When we fib from top to bottom, we're looking for resistances and targets to take profit. Okay, it's just what we do. So yeah, we used the 382 as a pretty severe resistance. We had multiple fails, so now we're kind of in the middle of the 382. And
but what I'm trying to point out is if it breaks through the top of the bull flag, you should have your extensions further up. I hope you still are not using the settings that are not the added settings that we shared.
wait.
No, so you fibbed the last leg up from the bottom there to the top of the pattern. Correct. Now, if you scrunch your chart up, you should have patterns above the recent highs or targets for the fibs. But maybe you didn't. Do you use the fib settings that we share with everybody else? Okay, so bring your chart down so that we can see higher than what you're showing on your chart now. Move it down or scrunch it up.
Move the chart, scrunch the chart up.
So we can see higher in price.
Yeah, I guess, do I not have that like set up?
I don't know. I'm looking at your chart right now, and all I see is the most recent high. I need to, it doesn't look like, so right click on your fibs. Do you have a template that you've saved that have the correct fib settings, or?
No, I thought I had them all, like extended lines and all that. So yeah, we'll get on that for sure after this.
Anyways, guys, if we had the fibs correct, or if I could draw, like my fibs are drawn, but for some reason now my chart is just bugging out. Let me just try it again. Who are you talking to, Rev? Okay. Yeah, it's not letting me scale it in or out, but it's also not letting me move it on the chart.
We're getting wrecked. We're getting hacked by Russians, man.
I think I got it. Maybe it was the auto thing. Okay, here we go. Finally. Sorry, guys. Okay. So I moved to a 2 hour. But as you can see, same bull flag pattern. And fibbed from the bottom of this leg to the top of this leg, we have our 3 targets here further up. And that's normally what you'll want to target in addition to that first double top here. So, I mean, targets in this case could be around 93 and then 97 or 98, and then at the ultimate fib extension around 10.4. So that's how we would trade a bull flag pattern.
Was that the Is it the last coin that was on the script, or did we have one more? Oh man.
Oh yeah, that was quite popular this week.
Yeah. Now we're one away, actually.
Yeah, and I think I'm not sure. It was a coin Mitch presented earlier. I think it was a similar pattern. So we have a downward move and then a parallel channel continuing downwards, but not as steeply. So that normally is also a reversal setup. And we're seeing a false kind of breakout. We got the break, we got the hook, but it never respected, at least not the first time. And so it's kind of been iffy along the breakout line. And now we broke out of it again, and we're just coming back down. And maybe we'll get a real retest now, respected retest, and maybe a go for this coin. But although we've looked at this coin many times this week, it's been asked many times, it still goes to show that maybe this needs to be played out. And if I drop it down to 1 hour, maybe we did get this break hook and go. And maybe some of us are in the trade. I didn't personally take that trade. I don't think Mitch was in it. Were you in it, Rev, at all? Or
Yeah, I was in it earlier this week.
so yeah, if I look at
I wasn't into it. Or like there was a lot of people posting about it and stuff.
Yeah, so to me it's just an iffy setup just so far. And they're not as easy to trade, for example, as falling wedges. They're like, there's a reason they move a measured down move, and then a sideways parallel channel like that. They're less likely to quickly explode to the upside, but I mean, it doesn't mean that it can't happen either. So I don't know if that covers everything that you guys want to see about APPC. It's not doing much so far, but we already have our targets and our potential resistances if it does start moving up, and we are ready. Something that you can maybe use too, in addition to some of the tools or indicators or patterns that we've shown you tonight, is always to maybe draw some hourly trend lines. So as you can see here, we can draw a little trend line on top, and if we wanted to, we could either wait for the price to come back and hit the previous parallel channel, or we could set and learn for a breakout of this line, or both. So, I mean, those would be two ways that I would be looking at maybe getting into APPC if I'm not in it.
Yeah, there's not a lot of volume in this one right now, guys, and I was in it earlier this week, and thought some things were going to happen, and it just didn't pan out for me. But guys, thank you once again for joining us. We went a little long, and I was muted a while ago, so I'm going to say it again. We're going to be in Discord for just a very short period of time. We'll be taking a few questions. We're not going to be doing a lot because we've all been up in the wee hours of the morning, which we're going to be getting on a little schedule to be able to put on demonstrations like this or chart readings, and but we'll be doing this particular one every Friday night from here on out to kind of recap what we've been through in the week, and we'll be doing different coins as well. So We really appreciate it. We really appreciate everybody showing up and all the comments and everything. Be sure to hit the like and subscribe button, and we made our goal of the 50 likes. We had 2 or 3 people from the other channel that we will not discuss tonight come in here and try to be disruptive, and they were immediately dealt with. And I appreciate all the moderators, Alan, Warner and Being. There's several of them in here. Brendan, Uham, all these guys do an excellent job. Come check us out over there on the Discord channel. The moderators have put that in the chat room for you. I want to thank James and Mitch. They put in a lot of hard work and everything, and we really appreciate the comments and everything. And we'll see you in Discord. James, Mitch, you want to say goodnight?
Yeah, good night, traders, and thanks for being here. Thanks, Rev, for having us once again, and looking forward to many more of these awesome charting sessions with you guys.
That's right, guys. Thanks so much for everything, and be sure to set those stop losses.
Absolutely, and
the take profits though.
And real 100%. Real quick, I'm going to throw this out there, and I'm going to bring this screen up. This screen right here really needs to be close attention paid to, guys. And it's this is a trading journal, and if you ain't got one, see me over there in the Discord channel, and I will definitely put you onto it. It's a big help, and it has a lot of information on it, and it helps you keep up on your winnings and losings. And it should be in every trader's best interest to keep a trading journal. So it should
be in your trading arsenal for sure.
If you're not keeping a trading journal, whether it be this one or any kind of other trading journal, be sure to get you a trading journal, and it'll pay off. I can assure you that. So with that being said, for James and Mitch, I'm the Rev of Crypto. We'll see you next time real soon. And as I always say, peace.
See you on Discord.
Good night, traders.